Mortgage Update 2020 with Mortgage Mohamed T Gulamali. There are three big changes and they're all bad. A double thumbs down bad. Fannie Mae and Freddie Mac are mortgage companies created by the US Congress that are now government sponsored monopolies. They don't actually write mortgages, but are the biggest buyer of them on the secondary market, meaning that they're the money bag that calls the shots. Change number one. Both Fannie Mae and Freddie Mac on refinances are adding an extra fee of half a point to the cost of interest rates, supposedly because the banks haven't lowered their interest rates low enough. Keep in mind, interest rates have been at the lowest point since ever. And as always, banks aren't going to eat the cost. That's going to get passed over to the consumer. Change number two. FHA on multi-units, we've always been able to use 75% of the market rent towards the income. Now we can only use 50%, unless you've got 6 months of reserves. Reserves are 1 month's payments of the principal and interest, your MIP, your property taxes, and your homeowner's insurance. Which means if you got 6 months of reserves, instead you should be putting a bigger down payment. Number three has to do with COVID. If you work hourly, we're supposed to use a year-to-date income calculation. The consensus through rationality was that we would be able to remove the weeks that you were out of work due to COVID through the mandatory lockdowns. Fannie Mae basically said no in black and white, meaning if you get paid hourly, the effective income that we can actually use is now going to be stifled. Well, that's your mortgage update for August 2020 with Mohamed T Gulamali. I hope the information was helpful, and in order to help us rank better, please leave a comment, hit the like button, and subscribe. And as always, stay blessed.